Hello, hi. Hello, everyone. We're just going to go ahead and wait a couple seconds to allow some of the other attendees to finish filtering into the webinar. And as always, please feel free to enjoy this wonderful starting slide and start to get psyched for our industry chat today. Thanks so much for joining us. We'll get started in just a moment. Okay. All right. Well, my name is Jenna Quinn, and it is my pleasure as the Assistant Director of Alumni Engagement to welcome you all to this 49er Industry Chat. Before we start, I just have a couple of housekeeping items. We just want to inform everyone that the session is being recorded. And so what that means for you is that it's going to be available on demand at our website at www.csulb.edu/alumni. So feel free to share that with family, friends, and anyone you think might be interested. Now, since this is a webinar format, we encourage everyone to use that Q&A box to submit your questions for our guest speaker. Feel free to go ahead and submit any questions that you have throughout the chat. Don't worry about waiting till the end. If it pops into your head, just throw it in the chat. And so now with that, I'm happy to welcome our guest speaker today, Varderes Barsegyan. Welcome, Varderes.
Hi, thank you so much for having me.
All right, yeah, thanks so much for joining us today. Just want to start off with your bio really quickly. Varderes is helping to build the financial operating system that will enable billions of people to adopt blockchain technologies and cryptocurrencies. Before entering into this industry, he gained extensive experience designing and implementing large-scale data-intensive systems in aerospace and biotech. He is now focused on running his startup and managing engineering teams in the Cardano blockchain ecosystem. Hopefully I didn't butcher that too bad.
Perfect.
But thank you so much. Thank you for joining us and welcome.
Great.
And
Would you like me to
yeah, so I think you had a presentation for us today. So go ahead and share that with us now, and I'll get out of your way.
No worries. Yep, do that right now. Can you see my screen?
Yep, sure can. Just about
Great.
There it is.
Awesome. Awesome. Okay. Well, yeah. Hello, everyone. I'm really happy you're here. Really grateful to be here. Greetings from Austin, Texas. CSLB is one of those places where you really get what you put into it. From my experience there, it's quite an impressive network of students, alumni that are doing incredible things across many different industries. So I'm really happy to be here and share some of the things that I've been working on in the last year and a half. So if you've been following the news in the last few years, especially when COVID started, blockchain and cryptocurrencies are a very polarizing topic, right? Because they involve speculative value and trading outside of the technology itself. But I think people could generally agree, or I think people will, if they explore it enough, they will agree that it's quite an interesting topic. So, to me at this point, being so deep in the industry, it is here to stay as an industry. And there's still but a lot of work to do, right, to really scale it to billions of people. And when I say billion, like I really do mean a billion, right? Blockchain layer ones must be able to scale to billions of active users and be able to process millions of transactions per second, so they can disrupt systems like Swift or Visa. In addition to disrupting many different industries outside of just finance, like that involve high throughput transactions, ownership, privacy, for example, like supply chain logistics, healthcare, informatics, to just name a few. However, without blockchain infrastructure, the pipelines for these cryptocurrencies, we cannot expect to build and scale at a rate that is required to really be able to disrupt the global economy in a meaningful way, and to be able to build compelling products that, compete with what traditional systems already provide us. So today I'd like to just talk briefly about my journey in kind of through Cal State Long Beach, leading up to Cal State Long Beach, and then what I do now. And I guess we'll have questions at the very end to answer. So please don't hesitate to ask me anything at the very end. So I'm a product of the CSU system. I have a degree in physics from CSUN, and then I pivoted to computer science and got my master's in CS from Long Beach State, Cal State Long Beach. And so during my time at CSUN, I worked for 2 years at a research lab ran by Dr. Schifero. It was a biophysics research lab. Here, I really learned how to write a lot of really scalable software for within the context of scientific research. I was simultaneously teaching just for as a side gig at a coding school in Tarzana called Great Minds Robotics. And actually, I could dig into this for a very long time, but teaching at the school is probably the most profound experience of my career. But we could talk about that another time. When I joined Cal State Long Beach, I immediately got an internship at Panasonic Avionics, which is just right there in Lake Forest. And then I was also doing some research with Dr. Soar in the Health and Sciences building. I took a semester off after that for some personal reasons, and then I came back to continue and finish up my degree. I was able to get another internship at the Aerospace Corporation, and then I worked with them pretty much full time until I graduated. Shortly after after I joined them full time, I was offered a job at DNA Nexus as a software engineer. I moved up to the Bay Area to kind of pursue this. It was a kind of opportunity I couldn't pass. And then during COVID, I was offered even a better job at Freenome. Freenome is an early stage cancer detection company. And I was working as a bioinformatics research engineer there. And so at this point, it was like my dream job, I would say. I felt like I thought it would be. It was like this hot startup, raised hundreds of millions of dollars. I think at this point they've raised over $1 billion. And I just felt still that it really wasn't my calling because it wasn't my company. I was in a really cool job, great team, learned a lot, but it just wasn't filling that kind of void that I wanted in my career of building my own thing from scratch. And so, I could talk at length about all of these things, obviously, and I'd love to follow up at some point if you're interested. And I guess there's a kind of a separate path in my career, more of an entrepreneurial path. And growing up, I grew up in an immigrant-owned family bakery, and so this is a really interesting experience for me because I kind of grew up not having summer breaks. Really, I had to wake up 5 a.m. every day in the summer and go and work at this bakery. But I really learned the value of money. My dad would pay me as a 12-year-old, for example, throughout the summer, and then at the end of the summer, I would just go and buy myself things. And I remember my first ever video game that I bought was through working at this bakery and earning money. So that was probably the most important experience in terms of kind of leading me to want to start a company. And that carried over until I was into my late 20s. And I just wasn't able to get rid of that thing that I was, put in my mind at such a young age.
Somebody wants to know if you remember the video game.
Yeah, of course. So before the summer, I asked my parents for a PlayStation 1. And I don't know, I forget what exact game I wanted, but I did want a PlayStation 1. And they were like, no, if you work, we'll just pay you. You can do whatever you want with the money. And at the end of the summer, I went to, at the time, Circuit City was still around.
Nice.
They're long gone. And I went and I bought a 12-year-old kid. I bought a PlayStation 1 and I bought the Tarzan video game. It was so fun. It was such a great game. Cool. But yeah, that was the story there. Great question. And so, fast forward many years later, I was at Freenome. I saw a lot of this kind of disruption happening in blockchain, and I wanted to dabble as a side project at some extra time. And I didn't really know what to do other than just investing in crypto, right? So Cardano was one of these blockchains that really stood out to me, and I'll explain why. And long story short, I kept going deeper and deeper into the community of Cardano, and I met this team called Genius Yield, who was just starting to get funded from VCs. And I was presented with an opportunity to be a founding engineer and a manager for them. Up until now, I'm still helping them out, although I've really cut down my time to help to really push through with Maestro. And so I'll explain in a bit as well. Maestro was kind of born out of something that came when doing work at Genius Yield. And so now these companies are very much intertwined in a sense that Genius Yield, the backbone of Genius Yield, the infrastructure, is ran by Maestro. And it was just made more sense for Maestro to be its own company because we were able to generalize a lot of the things we built to many other projects on Cardano. And so before I jump into specifics of the company and the things that I'm doing now, I'd like to talk about Cardano as a blockchain. Like, what is Cardano? So it's a proof of stake blockchain technology, and its cryptocurrency, its underlying currency is called ADA, named after Ada Lovelace, a scientist, mathematician. So it's a third generation blockchain that also has a smart contract platform, which just means that there's, for people that study computer science, there's Turing. It allows Turing complete arbitrary logic at the transaction validation level. So you don't just need a valid. You could, beyond just having a valid signature of the transaction, you can have some arbitrary logic, and that's really what a smart contract is. It's built upon it's a bespoke blockchain. It was designed from the ground up with very academic oriented. It's collaboration of researchers from around the world across many different universities that came together to design a blockchain that scales to many people and is sustainable in the future, not just in a environmental sense, but that it could sustain itself and evolve and improve in a decentralized way. It's based on many sound mathematical principles, particularly formal methods, and it's implemented with functional programming. And so this allows people to mathematically prove the correctness and the security of a smart contract. There's game theory that's designed within it in such a way that it really incentivizes participation and growth. And this is kind of the way this has manifested itself, is that the Cardano community is a very strong, growing, vibrant community of builders, organizations, researchers, businesses. And so really, this is kind of the guiding light of Cardano as a blockchain ecosystem, is to be an unopinionated and truly decentralized ecosystem that could scale to billions of users, could be able to process millions of transactions. And this is not just a technical problem, it's also an economical problem, creating incentive structures that incentivize participation and incentivize good behavior. And so, yeah, just kind of give you a little bit of a background of Cardano. And so the first project within Cardano that I was involved with is Genius Yield. They also have other platforms under the Genius X branding, but it's all kind of the parent company's Genius Yield. And the idea of Genius Yield is to be a DeFi platform for all. There are three major products within Genius Yield. One is a permissioned launchpad. It's permissioned because selling tokens on a blockchain and a launchpad, there are different regulatory implications depending on the country you're in, and so it allows you to implement those or configure those regulatory requirements and KYC people that want to buy tokens. Another product that we were able to build and release in addition to the launchpad by the end of 2022 is a vault staking platform. I won't get too much into staking, but it allows people to stake their Cardano native assets and earn yield from the project. And then the third kind of big project of Genius Yield is this, what's called a permissionless order book DEX. This is a huge rabbit hole. And so if you've ever participated in an exchange or worked with order books before, there's many sophisticated financial products within an order book. And we're building something like this in a decentralized way. Some of the features that come with this is called concentrated liquidity, yield optimization, smart liquidity management. And these are all of the different sophisticated kind of financial products we can build on top of a permissionless order book DEX. And these are all very interesting. I encourage you to Google these things and read about them. That's why I've listed them here. Otherwise, they're all very deep rabbit holes. Before building all this out, though, Genius Yield ran what's called an ISPO, initial stake pool offering. And this is a fundraising mechanism that's unique to the Cardano blockchain. And it basically requires, like I mentioned earlier, financial infrastructure, Cardano infrastructure that projects can utilize to raise funds from the community in a decentralized way. And when we did this for Genius Yield, me and my current co-founder as a hobby project, it kind of made us realize that, well, other projects in the space reached out to Genius, said, hey, who's running your ISPO? Like, we want to run this as well and raise money from the community. And so we realized that like many different people were reaching out to us to do this for them. And this was a perfect opportunity to start a company. And ISPOs, kind of long story short, it's a revolutionary fundraising mechanism that uses the Cardano blockchain, and it's built upon the proof of stake consensus of Cardano without any other additional tooling or things that are built around the blockchain. It's just a way to use the staking protocol of Cardano to raise money from minting blocks that built up the Cardano ledger. Anyways, very interesting stuff there. And so that's where kind of Maestro came about. So Maestro, we decided to expand its vision, not just be an ISPO infra provider, but since we had developed such deep technical understanding of the Cardano nodes and the Cardano software, we decided to expand our scope as infra providers to be also a dApp development platform. And we started to kind of brainstorm and think about like what are different products that we can build within this idea of being a full-blown dApp developer platform. So for example, we're currently building and we have beta users of blockchain indexers and APIs. So tools, software, off-chain software that indexes the blockchain and allows dApp developers to query those APIs and read data from the blockchain. We have transaction management software, event management software, and smart contracts as a service. And these are just different verticals that we built upon our underlying Cardano node infrastructure. And we do still continue to provide these node management services, for example, the ISPO. One of the other things that we have started as part of Maestro is called the Cardano Blockchain Infrastructure Alliance. And we realized that there are all these open source developers in the ecosystem, different kind of similar companies all reinventing the wheel, and kind of some of them were very up to date with what was happening and kept updating very regularly. Some of them were very behind. And we saw it as an opportunity to have this nonprofit that's associated with Maestro to like bring the builders of Cardano under this alliance to really streamline the process of like propagating these updates to the community. And we're actually having our first meeting in a few weeks with some of the people that want to be part of it. And so this is kind of our way to obviously to build our own reputation as a company, but also to like participate actively in the community as a whole, not just build our business. We're also raising money. I'll talk about that in a bit. And one of the goals of raising money is to build a core engineering team here in Austin. And so, we have some work to do before we start hiring people and bringing them to Austin. The team right now is fully remote, but the goal is to have some of the very core engineers, like people that are working directly with the blockchain itself, to be physically in the same place. So kind of a timeline of Maestro. June 2021, we were at Freenome, started as just a hobby project. We got in touch with Genius Yield. They asked us to do what we were doing as a hobby at a much larger scale. We decided to spin it off into a company. We formed the company in March. We raised an $840,000 pre-seed round, and we started to develop our dApp platform. And we're currently developing it while also trying to raise a seed round of $3 million. And we're currently talking to VCs. I was actually on a call with a VC literally 15 minutes before this call. One of the most difficult things ever is to like prepare a pitch and prepare conversations with VCs because they're very interested in different things, right? I'll talk about this a little later. And then, so we want to release the stat platform, not just right now we have like fragmented products that beta testers are using. We want to have like a single console dashboard where users, stat developers log into and subscribe to the platform and start to use it kind of in a comprehensive way. And so that's the goal of this quarter and part of the reason why we want to raise for a seed round. And then kind of longer term, later this year, expand out our node offerings, indexing to layer twos. Layer twos are basically blockchains that are built on top of the main blockchain to like scale up processing, scale up a number of users that can participate in kind of a fast way. And then longer term, so starting early next year, we want to expand out into other blockchains, not just Cardano. And this is important because you don't want to be tied to long term. You don't want to be tied to a single ecosystem. So I wanted to talk very briefly about the state of the blockchain industry, where this is not just crypto, but overall markets, are not in great shape because just natural cycle of, the economic global economy, and then also like things happening in the world. And obviously this has an effect on crypto because crypto is a speculative asset. It gets traded on markets. So when crypto prices are down, people refer to this as a crypto winter. In other words, a bear market. So how does one freeze in a crypto winter and die in it? And many projects right now are kind of dying off. So a lot of fraudulent projects, pump and dumps, the next sexy NFT project, right? Those aren't really going to last in these kinds of environments. Projects that don't have strong fundamentals technically, like in terms of what they're trying to solve and the value that they're creating. VCs, investors, the community is not participating in projects that don't have a clear, some kind of a clear vision. And so what do investors, we're currently talking to VCs and investors. And so like I've realized like the types of questions they're asking now versus what they were asking 6 months ago, it's more around, are you building infrastructure, core products that are catalyst to bring others into the space? Are you enabling interoperability between different ecosystems, different blockchains? Are you helping people on-ramp into a blockchain, off-ramp out of that blockchain? Do you already have some traction? Do you have an MVP? Do you already have some users, right? So this is, investors have huge funds that they're managing and they still want to invest, right? And so they're just very much a lot more filtered and particular about what projects they're putting their money into. And so crypto is here to stay, but the road ahead will be quite challenging in terms of like really building fundamentally important products that last through the bear market. Typically the cycle of crypto in terms of, again, trading is about every 4 years, there's what's called a Bitcoin halvening. And this is just kind of the game theory, the implementation of Bitcoin and how they're distributed to miners. Bitcoin's a completely different blockchain, but it has a huge impact on the whole industry because it's the first one, it's the biggest one. And so there's going to be another Bitcoin halvening around spring of next year. And usually within a year, this sets up the foundations for another bull market. So this has happened about 4 times already, 3 times, I guess, more clearly. So, if you kind of go with this trend, it's expected to happen again, starting sometime early to mid next year. This isn't any kind of financial thing. It's just kind of us to prepare our business in terms of like how we're going to grow, when we're going to grow, and things like that. It's just good to have these things in mind and be prepared. Last thing I wanted to talk about was some general things I've learned when starting a company. There are some very big challenges with starting a company. And so one of the things that I realized was you have to very much keep iterating on your vision and prioritizing based on limited resources and your client and their interests. So this concept of ruthless prioritization really comes into play. Acquiring customers is obviously very hard because you're effectively selling, and you don't have enough, of a big of a company to have a sales team. So you, as founders, as technical founders, have to go out there into conferences and to go up to people that might be interested in what you're doing, get to know what they're doing as well, and potentially like have them test your services, give them beta API keys, get in touch with them. Talking to VCs is very difficult, fundraising, because you're asking them to give you large amounts of money. So you have to convince them that what you're building is going to multiply their investment and, within a reasonable amount of time. Hiring and growth is very challenging because you need to hire people and convince them to work for your company, but also retain them. Being efficient, knowing how to manage your resources once you have a team. And then you're never really in a comfort zone. You're always thinking, like, trying to stay ahead. You're trying to like not let your team down, develop the next product, design the next thing. So you're never really like, you're always learning something new. You're always learning something new about yourself. And so you're never really quite comfortable. But I think the rewarding experience aspects of this, there's many. So it's very satisfying and empowering to like start your own company and see some traction. You learn a lot about yourself and become self-aware. And so you understand your limitations and your strengths, but and being confronted with these kinds of challenges of starting a company really like puts those in front of you. You really move the needle, right? Like you have a complete influence over your company and you have some influence in an industry. And so your decisions start to have serious impact with respect to your team, but also your customers. Your network grows immensely. So even if something you're doing doesn't work out, you have built a network of other co-founders, partners, engineers that work with you, other types of professionals that work with you, investors that you can talk to for future projects. You learn to become a lot more empathetic, because you have to keep motivating people to stay and to work and to be interested in what they're building. Not, because you're, as a co-founder, super interested in what you're doing. You sacrifice so much to like get it up and running, but people you've hired just don't have that level of engagement. And so you have to learn to like relate to them and empathize with people so you can keep them motivated. And then I think the most important thing by far is that I personally have found the most satisfying is this idea that you create opportunities for other people, right? So you bring them into a company, you hire them, you enable them to work on something that's very satisfying and interesting. And so this part for me has like always like gives me that boost. So yeah, there's still a lot of work to do and everything, but it's always nice to take a step back and kind of think about what is both challenging and rewarding about starting a software company. Yeah, it's really all I wanted to say. Again, really thankful for being here. Please stay in touch. Don't hesitate. I'm very active on Telegram because the industry is they love Telegram for some reason. LinkedIn, obviously, if you want to connect more, I guess, professionally. Twitter, semi-active on Twitter, but I check because a lot of blockchain news is kind of first comes up in Twitter, and then you can email me with any questions or ideas. Very happy to hear. We're currently very actively trying to raise for the seed round. And right after that, we're going to start hiring. And so happy to talk to anyone that's interested in the space, has the skills we need. And then for people that are maybe alum and have not necessarily looking to be hired, but partner up, like we're always looking for potential partnerships and collaborations. And so, again, please don't hesitate to reach out. Happy to stay in touch and talk further. Yeah, yeah. So let's make CSOB a blockchain hub. I think there's a lot of potential. It's an incredibly fast-moving place, and there's a lot of interest that's growing across the world. And I think as an engineering college, CS department, having like a blockchain club or a presence will be very helpful. And you have people in your alumni network like myself that work in the industry and could provide a lot of valuable information. So I think CSULB has a lot of potential to like be this pipeline of people that are interested in the space, but also it's good to have a hub of blockchain that keeps students engaged. It involves a lot of computer science and engineering that I think people might want to work within, like as an industry for a career. Anyway, that's all I have. Happy to
Awesome.
answer any questions or just chat for the rest of the time.
Yeah, no, thank you. I think that was absolutely wonderful, and a lot of great information. As you were talking, I think so. Someone wanted to know. I think their question was about VC. You kept saying VC, and I think what you were saying was venture capitalist, right? But I mean, going off of that, venture capitalist, like, what do those pitch meetings look like? Is it an episode of Shark Tank, or how do you how do those meetings look like, and how do you convince somebody that what you're doing, especially if something that's a little very new, it's a new field, how do you convince them to invest?
That's an incredibly important question you asked. Yeah, so I think it depends. Okay, so it starts with you meet VCs a lot in like networking events, conferences. So you tend to go to events that are targeted in this industry, and so VCs that are there are interested in the field. There's also you meet VCs that are very well known, or they're very active in their investments, but they don't necessarily have a huge portfolio of crypto projects. And so you kind of have to kind of cater your talk a bit, your pitch, to the type of VC. And so it's really important to, if you did manage to land a call, it's really important to do your research about that VC and understand where they're coming from. And there's like 3 tiers of VCs that we've encountered. There are ones that are very, very familiar with Cardano, have invested in other projects, or are very interested and understand Cardano. There's VCs that are very active in blockchain, Web3, crypto. Generally, I don't like the term Web3, but whatever. And so they don't know Cardano too well, so you have to really sell them on Cardano. And then there are VCs that are very obviously have a huge portfolio, but not so much in Web3, and so you have to really know who you're talking to. But across the board, right, VCs don't think like technical co-founders or engineers. It's really easy to lose them in technical details. You have to make it very clear to them that within a reasonable amount of time, their investment is going to multiply if you're able to succeed as a company. Their metrics of success are very different from your metric of success. Yours as an engineer is like, build a product, have people use it, have it scale, all these things. And then theirs is like, how is this going to expand my net worth or whatever, right? So you have to talk to them in a way that matters, like is important, that they can relate to.
Awesome.
I don't know if that answers your question, but yeah.
No, I think it does.
Yeah.
We have another question come in. Using your hindsight bias, what was your most difficult lesson learned when you started out as a business owner?
Yeah, so we formed in March, around May, June. We
still kind of
got
starting out.
Yeah, exactly. Like we were legally formed and all that, and we had started to talk to some VCs, and then it hadn't quite hit the crypto winter at the time yet. And so we got in touch with a project that was doing 2 co-founders. They were doing something that was like not the same, but it could be easily built upon what we were doing, which would mean that our product offering, like right off the bat, would be much larger. And we tried to partner up with them, and we tried to have like a bigger operation with 4 co-founders as opposed to like 2 smaller operations, 2 co-founders each. And to this day, I regret. So we tried to form in a kind of a neutral way to be, all these negotiations. And it turns out by August, we decided, like September, we decided to just part ways. August, because it just wasn't, like, we all wanted different things. We were all in different stages of our lives. And there was many different factors there, and the whole process of like trying to figure that out and make it work was like, I don't want to say waste of time, but it was like I would have never taken that step, because then I learned, oh, when it comes to founding a company, it's good to have, if you're one person, it's difficult because everything kind of falls on your shoulders. If you're two people, it's easier. It's obviously it's 50-50 in a way, but it's at least you can bounce ideas off of each other. But if you're three people, you have someone that's a tiebreaker. But if you're four people, you can have potential, like already you can have a fragmentation within the founder level. And then it's very difficult to coordinate and agree and be on the same page with four people. So I found that 2 or 3 people, co-founders, is probably the best in terms of like at least how I operate and the types of companies I want to start. That doesn't mean your company doesn't grow to potentially thousands of people. It just means that initial top level people, you have to be very, very careful about who you want to partner up with and who your founders are going to be. And I made a huge mistake in assuming that these 2 other people would be like good co-founders for us, and it turns out it was a massive waste of our time. So that was the biggest challenge for sure. Awesome. Or I guess biggest thing I learned was to extremely selective about who you're trying to found a company with.
Yeah, no, I mean, I definitely understand that. I was just in a talk earlier where the speaker was, saying like problems don't age well. Like you have to have the right people at the start, because if there's issues at the beginning, they're going to continue to be an issue. So no, it makes absolutely a lot of sense. I think that's great advice. So how did the COVID-19 pandemic affect the blockchain industry? I think that, at least for me, right, I feel like as a layman, not really understanding this world to any great extent, like I feel like when we were at home, that was when, these big concepts started becoming mainstream. So what is this era, this recent era and the pandemic, how has it affected the work that you do?
Yeah, I mean, listen, this has so many layers to it, but I think one of the major factors was that what happened was that when COVID-19 hit, like the world economy started coming kind of to a halt. People stopped moving around, supply chains were stopping and like getting all screwed up, and lots of different industries were just suffering naturally because people were not doing a lot of the things that they were doing, or not, a lot of the forces and the flow of money and capital was going from like these industries that were kind of more or less stable state, or there was like an ability to like predict and to have trajectories to like very different industries. And so anyways, like lots of major issues economically that came about as a result of like locking down and not allowing movement, and also the virus itself, right? And so the way that the U.S. government and many other central banks wanted to save this thing from the economy from completely collapsing, which could lead to wars and all these things, was to like inflate the money supply, and to basically like decrease the interest rates, the borrow rate from the Federal Reserve down to very low, almost I think 0. And so that would make money much cheaper and accessible. And so that's why things started to get more expensive. And that's kind of a very surface level explanation as to what happened there. And so cryptocurrencies, one of the things that happened was they became a more reliable store of value. So people started to pour their money, institutions, retail investors start to pour their money into cryptocurrency investments, because the monetary supply, the monetary policy of cryptocurrencies are not determined by someone sitting at the helm, like changing a policy. They're determined by software, and they're encoded into the blockchains, peer-to-peer software. And since it's decentralized, it's very difficult for there to be like a takeover of this network, right? And so kind of technologically, it made more sense to have your value in a thing where someone can't just fine tune it or change it and change its supply. Supply is already defined in the code. And so it became a more secure store of money. And so I think that was one of those things that really shot up the value of cryptocurrencies, which set off a whole era of the industry. People started to build more interesting financial products. There was this whole DeFi summer where people started to build like trading platforms and exchanges and lending platforms using smart contracts as a result of like now so much liquidity being poured into, so much money being poured into the industry. People started to say, oh, well, these technologies have gotten better. There's all this new capital and liquidity that's being poured into the industry. People started to build really cool, like interesting financial products, which created more activity, which brought up the value because more people wanted to participate. So yeah, there's those are some major factors I would say as to why there's so much of this hype, and not just hype, but like a momentum in the industry.
No, very, very interesting choice of words, momentum, right? Because I mean, you hear people all the time say, "Oh, it's a fad," but you know, you're here, you're in the space, you see what you can do, and you think it's here to stay.
Absolutely, 100%. I mean, I'm deep in a company and the industry in a particular blockchain, and I'm seeing venture capital money and being poured into startups still. There's like regulation is getting better at it without necessarily kind of, what's the word? So regulations coming in, and it's not so much inhibiting, I guess, innovation. So the idea is you want to be able to innovate and disrupt these huge industries while also being able to regulate it so that people don't get scammed out of their money, among other things. So the industry itself is very much maturing. There's partnerships and collaborations happening, not just between startups and companies, but also governments are starting to incorporate blockchain technologies. There's 2 projects on Cardano that are like heavily involved in like the financial development of financial systems in African countries. It's called Empower and World Mobile. And they're like basically helping bypass the whole traditional finance route within African countries, similar to telecommunications, how a lot of countries just jumped straight into mobile phones rather than having like landlines as like an intermediate step. So blockchain is playing a similar role in developing countries, in that people could just jump into using sophisticated financial products without having this intermediate step of like centralized financial institutions. So there's like all these very, very real things happening. And there's always going to be speculation and trading and price action, because it's they're tradable assets on markets. So there's the price action, and the trading aspect of it is just going to be like, it's going to be just part of it always,
Absolutely.
Anyway.
Yeah. Well, so I think we have time for just one last question. And somebody running said, so how many employees do you currently have? I think I know the answer to that one. And what are some of your goals for your company's growth in the coming years?
Yeah, so Genius Yield, first, so I helped build up the team quite a bit there to like around, I think it's like 18 engineers now. The company as a whole is much larger, but I was primarily focused on hiring and onboarding engineers across different types of disciplines. So I think there's like 18 full-time engineers at Genius Yield. Maestro, it's 10 people, all except one are engineers. And one of the things we're going to ramp up on when we close our seed round is not just hiring more engineers, but marketing, business development people to come in and like to really help get our name out there. And so right now, to long story short, there's 10 people at Maestro, and there's about 18 engineers at Genius Yield.
Awesome. Okay. Well, thank you so much. This has been incredibly educational,
Great,
to say the least. And just to encourage everyone to go ahead and reach out to you We'll have they'll have the recording and the slide with your information. So please, everyone, if you have any questions, please reach out. And thank you so much for joining us today, and have a great day.
Thank you very much. Have a nice day. Bye.
Bye, everybody.